Good morning, all traders and serious students of the market across the globe. This is Jeff Killian for the Vector Traders Consortium. The time is 9:17 and 30 seconds on February 1st, 2021. Today, we want to alert everyone on the possibilities of a major market sell-off that is now in play. The action that came through last week across the board, beginning with our analysis of the Dow equities end-of-day charts, here at this point with increased volume after the dry up, provided some serious downside profits for the short people, and we were in it. Let's go through some of the charts. I want to cover some of the negative divergences that have existed, some primaries, some secondaries, and take a look at the pent-up selling pressure that was behind the prices before they started the sell-off again. That took a few days time to happen out again, beginning on 127, small update here, and then again, the carnage that took place on the 29th last Friday. Okay, all right, let's get right to the MFI, and you're going to see clearly here the pent-up selling pressure here, the difference in the peaks on the levels of the indicator here as compared to the prices, clearly indicating that this market was going to fall down. Now, this is short-term smart money tracker, so we need to pay a special attention to this so that we understand the interaction between what the levels of the real money flow are in and then coming out of the market in order to be able to take advantage of this type of sell-off. Here, under Chaikin money flows category, long-term negative divergence, a primary, and then again, a secondary here. This is critically important. Look at the difference in where the indicator peaks levels are, the values behind them, as compared to the past, and the run-up of the prices here on inflated highs. Clearly, once again, looking for the prices to sell off. The rubber band can only be stretched back so far, people, before things have to change. Looking at one singular price-based indicator here, let's take a look at the SMI. And as we go through this, strictly price-based indicator at this point under an additional negative divergence. This has nothing to do with money flow, strictly the actual prices and the confirmation behind what the indicator is saying, again, as compared to the up move of the prices on a primary and again a secondary negative divergence here, crossover complete from above to below and through internal levels here, free falling to the downside. Okay, let's move on a little faster here and get into the S&P equities here and run through some of these charts. As you'll see here, obviously a great amount of disparity, more than 38, almost 40% in here as compared to the prices. We'll go right through them here. Look at the Chaikin oscillator here, the MACD, again, another negative divergence. So now we're seeing, look at the strength here, multiple negative divergences in multiple time frames, clearly indicating the amount of pent-up selling pressure that is behind these prices that are trading up on inflated highs. So out of the cash market and into ES. One moment. Okay, here we have increased volume. This is where we need to center our attention at this point. Right here, 3 consecutive days after the dry up. Very similar, but not the same situation that happened on the equities market here. And going through the charts rather quickly, once again, here's your long-term and short-term negative divergence. We have confluence between multiple markets now under multiple negative divergences in multiple time frames out of multiple indicators. There we are. Every trader knows that the most amount of money to be made, the lion's share of money to be made, is when the market turns and moves in a different direction, in this case to the short side. I am aware that ES is trading up right now. We'll get to that in a minute. And I am aware that YM is trading up right now, but I do know very well that that is nothing more than a give back at this moment. People, the only way that this market will not follow through to the outside, to the downside, is if this is a major profit taking that happened at this particular level, and that this will be one of the greatest shakeouts of all time. This is the only reason why this market will not continue to move to the downside. So yes, is there a possibility that the market will not sell off anymore? Absolutely. but not anywhere near the possibility or the probability as compared to what I have just laid down. Let me get into my primary market here for a minute and quickly becoming everyone's. YM daily here. Let's look at the levels here for a moment. Here's your dry up in the volume. Here's another 3 spikes. And notice how these are consecutively higher. You didn't see that on ES. You saw mixed accumulated volume. Here, Friday's action was closing through 3109. And even here, if you go back to the first day of the sell-off, when we got through this floor level at 3719, that's 3719, the probe was already through 3109. Here it is. There's the probe. Here's another one, a lower probe. And here we are before this morning's action. Here's a probe through it here. So these are the downside levels that correspond to the possibilities of the most recent areas where prices could sell off to on an EOD basis. If we get through and as far as to 28,893, well, then the interlocking of these bars with a strong POC here would take an additional strong amount of volume in order to follow through and get down to this pivot point low area at this point. Going through, here we are again. No trend lines, you don't need them. We just went through it. MFI way down as compared to the prices. SMI way down as compared to the prices, confirming the change in trend. Here we are under the Chaikin money flows and negative divergence here and through its internal levels. Again, MACD, Chaikin oscillator. What more does a trader need? Not much. This is exactly what we went through yesterday, and talking with a few of my constituents regarding, the possibilities of sell-off. Fundamentally speaking, the market is not in good shape. That's the story for another time, and we are out of the available time because the market's going to open in just a few minutes. So I wanted to get this out. I'll pass it off to one of my associates. We'll try to get it uploaded as soon as humanly possible, hopefully right before the market opens. And so my pleasure to present to the world today. For any information regarding what we offer here on the educational side, please contact us through the contact form on the site for sophisticated retail trader mentorship programs or our trading courses. Again, Jeff Killian for the VTC. The time is now 9:25 and 15 seconds. Good luck to all of you out there today.